All right, welcome back to the review for the first exam here. Oh, so first thing I do want to go over is that since we already went through the first 4 chapters yesterday, we're going to continue on with the last 2 chapters, chapter 5 and chapter 6. Okay, so chapter 5, what did we learn in chapter 5? Well, we introduced you to inventory, right? And that there's 2 different type of ways that we keep track of our inventory, right? And that is periodic and perpetual, right? Here are the definitions, right? Periodic means every once in a while, okay? While your perpetual means constantly, okay? And here's the difference between the 2, right? When we're looking at periodic versus perpetual, right, the difference is that at the end of the periodic inventory, a conversion entry is necessary because when we recognize our inventory, we recognize them as expenses, and then at the end of the accounting period is when we convert them to our inventory as well as our cost of goods sold. So in this case, that is what you need to do. Where the perpetual, everything is counted no matter where you are in your accounting period. So every time you make a purchase, you are keeping track of it. Every time you sell something, you're also updating your inventory. So at the end of the accounting period, you automatically know exactly how many items you have in your inventory at all times. But that's not what we're talking about here, right? Because chapter 5, we mainly focused on periodic inventory, okay? So what happens when we do periodic inventory? We are going to journalize it as a purchase expense and a freight expense, right? Everything is separated, okay? We recognize our expenses as completely separate things, right? But that is how you are going to recognize that, okay? And then next here we have the shipping, right? You have to understand what FOB and COD stands for, freight on board and cash on delivery. Understand that when we're on shipping point, which is the seller's store, and then when we get to the middle point, the buyer is responsible to pay for the shipping there. And of course, when it's the midway point to the buyer's store, which is going to be FOB destination, okay, the seller is responsible for whatever happens there, paying for the shipping and also responsible for the items, okay? So when we dive into periodic inventory, right, we learned that there are 2 methods of recording, especially when we have things like discounts. Okay, if we choose to do the net method, right, net means that you're going to take the discount immediately, right, while gross, you take the discount later. Okay, so here's the examples here. Okay, understand that what terms does, okay, because terms plays a huge portion in why we take our discounts, okay. So again, how do you read the terms? Straightforward, whatever the percentage is. The second number is going to be your discount period due date. And then your last number after the net means how many days you actually have to pay upon receiving the bill. How many days you have to pay afterwards. So again, there'd be a 2% if you paid within 15 days. If not, then you have to pay the whole thing in 30. Okay. We also talked about purchase returns and allowances, right? If you are doing a return, you can only return the actual purchase price of the product. You cannot return shipping. You cannot return any discounts. You can't return any of those things, okay? So that's one thing that you need to know. So if it's a full refund, then you can only refund for the total amount of purchase price, okay? But if you're doing an allowance, remember an allowance is only a portion of the money that you're supposed to be refunded. So in this case, right, if it's 10%, 15%, 20%, right, you're only refunding the small portion of what you're originally trying to return. And usually what happens is the idea is you usually end up keeping the items as well. And of course, we also talked about the conversion entry, right? You need to make sure that you are aware of the inventory, cost of goods sold, purchase expense, and freight expense. Okay. And then, of course, we dive into this section here where we did the costing methods. If you are using FIFO, you're going to start from the top and make your way down to the bottom. Okay, so that means when we reach the end of the accounting period, we're taking our group of inventory items, and for FIFO, it's first in, first out. So that means we're going to start from the top and get rid of every single item until we reach the bottom. LIFO is the opposite way, right? Instead of going from top to bottom, we're going from bottom and making our way all the way up to the top. Okay. And then, of course, last but not least, weighted average is where we don't care which came first or which batch came last. All we care about is getting our grand total quantity and our grand total cost here. And we're going to take that cost and divide it, spread it evenly amongst the total of core items that we have available to get our average cost per item. So in this case, we don't care what batch came first, what batch came last. We treat every single batch of items as they were all equally purchased at one price point, okay? So that's why we have to do an average cost per item, okay? And of course, then we dove into chapter 6. Chapter 6, we talked about how we record our sales. Okay, in this case, right, we don't keep track of our inventory. So in this case, all we're strictly responsible for is just to journalize the sale. Okay, of course, with sales comes with sales returns and allowances. So if you have to sell something, you have to refund it. Okay, and of course, we also talked about what happens when you have an allowance as well. Okay, where you only give a portion of the sales money back, right? And then we also talked about discounts as well, right? Whether it's an in-store wide sale or whether you give your customers terms, where you give them incentives to take advantage of a discount, right? And those are the two examples there. And then the last section for chapter 6 here is where we talked about the lower cost of market. Once again, I'm not gonna test you on knowing how to journalize it, but at least get the idea of how to calculate the lower cost of market, right? There are 4 things that we are given here, or 4 things that we have to solve for, and then of course everything else is given to you. Okay, such as all the information, such as the original price, the replacement, the selling price, and the cost of disposal, and the amount of profit, right? All of those are going to be given to you. The only thing that you have to do is figure out how you could take all of those numbers and calculate the ceiling, the floor, and then determine the market and the lower cost of market. Okay, so in this case, right, a good example would be here is that your ceiling and your floor is a calculation, where the market is a comparison as well as the lower cost of market is also a comparison. Okay? And that is it for chapter 6. Okay, we'll talk about chapter 7 and chapter 8 after we come back from the exam. Okay. So let's dive right into this chapter 5 exercise here. Right here, question number 25. Okay, what are the tracking methods used for inventory?
Periodic and a perpetual A.
Yes, it is, right? Okay, now be very, very careful when reading because I asked you what the tracking methods are for inventory, right? You don't use periodic and perpetual for anything other than inventory, right? You don't do it for keeping track of your sales, right? Never mind. Exactly. You don't use it for your sales, right? You use it strictly for inventory only, okay? Calendar year and fiscal year, right? That just determines on when you're gonna choose to start your accounting period, but also for tax purposes, right? When are you going to file your taxes? Cash basis versus accrual basis is how you're going to keep track of your money, not inventory. Okay, and so on and so forth. Okay, number 26. What are the costing methods used in inventory? So in this case, this one says costing method.
I thought it was all of the above.
All of the above is correct because, yes, for periodic, we got to see all three of these, right? For perpetual, we will also be using the same three. And then, of course, specific ID, which is something I did not talk about in class strictly because it might not apply to your business because specific ID, but I did give you an example, right? It's like an auto dealership, an auto repair shop, right? So in this case, there you go, D all above. This does exist as a costing method, okay? So here's the huge difference here. Costing method, not tracking method, costing method. Yes.
So for perpetual, it's not called a weighted average, it's called a moving average.
Yes, I mean, honestly, weighted and moving average, it's just because when we actually calculate it, you're going to see why it's called a moving average. But at the end of the day, the better terminology to do this is called average costing because they both take the average regardless.
Okay, thank
Mm-hmm.
you.
Mm-hmm. But they technically do the same exact thing. Okay, just one of them is, you'll see when we dive into chapter 8, what does it mean when it's a moving average, okay, versus a weighted average. Okay, good. 27, okay. An auto repair shop stocks inventory based on car manufacturer, brands, models, and car parts. This is an example of which kind of inventory costing method.
Isn't that specific ID?
Yeah, so this one I kind of gave you the answer for this one, right? Because this one it's looking for a specific, a serial number would be a great example of a specific ID inventory, right? Okay. All right, number 28. Okay, when delivery charges are made COD, what does that mean? Oh, sorry. What does that mean?
Cash on delivery?
Cash on delivery, right? Okay, doesn't mean code on demand. Doesn't mean currently orders dispatched or discharged. Okay, or crate on departure. No, it's possible, but it's not. Okay. All right, number 29. Okay, what is the definition of periodic and perpetual?
A.
Periodic means once in a while perpetual means constantly. Yes. Okay, so again, you could have gotten this answer right from the review sheet. This one too. Okay. Number 30, okay? True or false at the end of the periodic inventory, okay? Sorry, I read that too fast. At the end of the period, under the periodic tracking method, okay, a conversion entry is necessary or needed.
True.
Yes, that is 100% true. Okay. Okay, so here we are looking at our very first inventory problem here. I'm actually gonna, let me see. Okay, so in this case, right, your question here gives you a scenario, and your job is you're going to fill out this inventory worksheet, okay? And the most important thing that you need to know here is your tracking and costing methods are periodic FIFO, okay? FIFO, okay? And here are the questions that you will be answering, okay, for question 31 and 32 here, right? And some of them will even say at the very top, use this table down below to answer the next two questions, okay? So let's go ahead and go through this example here where it says June 1st, you purchased 100 toys at $1 each, okay, with the freight costing you $25. So, date, it's June 1st. We purchased 100 toys at $1 each with the freight of $25. So, what's my total purchase price here?
$100.
$100 plus 25 gives you a total cost of
$125.
$125. And because it's FIFO, we need to keep our. Go ahead.
Oh, it's $1.25.
Yes, good, right? Because we have it's FIFO, we have to keep our batches separate. So we need to calculate my cost per item, which in this case, $125 divided by 100 will give you $1.25. Okay. Then on June 10, right, you purchased 200 toys at $1.25 each with a freight costing $50. So, June 10, you purchased 200 items at $1.25 with a freight of $50. So, in this case, total purchase price?
$250. Total $300. And then cost was $1.50.
Okay, it's going to cost me $1.50 per item. Right. So then on June 12th, okay, you sold 200 toys at $5 each. No sales tax was charged. So in this case, what do I do with this piece of information right here? What do I do with this sales I made on June 12th?
We know the first 100 and then 100 of the second one is gone on that sale. Or we know that 200 is sold.
What do I do with this information? Am I putting it into my table or what am I going to be doing with it?
Oh, no. It won't be recorded on the worksheet.
It won't be recorded on the worksheet because with periodic inventory, we don't care about keeping track of our sales. What do we care about? For now, just our purchases. So in this case, we don't need to do anything with this transaction here. But I see what you were doing here. No, you do not immediately take it out of your inventory. Okay? Because that's perpetual inventory, not periodic. Periodic, we don't care. We wait till the very end and then we just take our batches of inventory and just get rid of it, okay? So for now, we ignore that we sold that 12 on the 12 that we sold that 200 units. Okay? All right, what about on June 15? You end up purchasing 300 toys costing at $1.50 with a freight of $75. Okay, so in this case, what's my total purchase price?
$4.50
plus 75.
total $5.25.
Making it
$1.75.
$1.75 each. Okay. And of course, we made another another sale on June 20th, so we can ignore that, except for this, okay? Because when we find out that on June 30th, you have a total of 150 toys left on hand. So let's go ahead and plug this in. So we have a total of 150 as my ending balance. So let's add up my totals here. So what was my total units that I purchased?
600.
600 with my total purchase price
$800.
plus my freight,
150.
making my total cost to be
950.
good. Okay. So now if I started out with 600 units and I have 150 left, how many did I sell?
450.
450. Okay. So now we need to solve for my inventory, right? If I am using the rules of FIFO, right, first in, first out, how many items am I going to get rid of first? Which batch of inventory am I going to get rid of first?
That one came on June 1st.
Okay, so that was 100 items, right? And right now it's currently at $1.25, so that's going to give me $1.25. Okay, that was my first 100. How many more do I need to keep selling?
50 more.
350 more.
From the second batch.
Okay, so in this case, we're going to take all 200 because we need to sell 350 more. And here you go. So I sold all 200 items, which I already know is going to give me a total of $300. Okay, so now I'm at 300. And how many more do I need to keep selling?
150.
Okay, 150 at $1.75 is going to give me a grand total of
The half of the total cost is 250. 262.50.
okay, 262.50 you said? Okay. So in this case, that's my grand total of 450 units at a grand total cost of goods sold to be
I got 687.50.
68750. Okay, and then what is my grand total for my beginning balance or ending balance, excuse me?
So the difference between 950 and then the cost of the goods sold is $262.50.
Okay, so let's answer the questions. Question number 31. Okay, what is the total cost of your ending inventory on hand? Your 150 toys. Right, the 262.50 is what we solved for. Okay. Okay. And then question number 32, what is the total cost of your goods sold?
687.50.
Okay. All right. So that was FIFO, okay? Now in this case, right, to save you some extra time here, this is the same exact scenario. Only difference is your tracking and costing method this time is going to be your periodic, but this time it's weighted average. Okay, so weighted average. So what does that mean? Okay, well, since it's the same exact problem as this one, right? You're going to have the same numbers. Okay, so I'm going to copy all of this and paste it down into this table here. Okay, because you're still going to get that June 1st made a purchase of 100, June 10 you made a purchase of 200, and June 15 you made a purchase of 300, okay? So all of it is the same. Your ending balance, okay? On June 30th, you had a total of 150 toys on hand. So that is also the same. This time we have weighted average as our costing method. So in this case, if I had 600 units and I have 150 remaining, I sold 450 units. Now, let's go ahead and how do I solve for my average cost per item?
You divide 950 by 600. 950 divided by 600, yeah.
Okay? And that
I
should
got
give you
1.583333.
1.85. Oh, 333.
4 threes.
So here, right, you can also put that here. Right? That is my average cost per item, right? I'm taking my total cost and divided by my total quantity, right? Because I'm spreading the total cost or evenly amongst the number of units that I have right now. So in this case, right, if I need to solve for my cost of goods sold was 400 times $1.5, 3. What is my ending, what is my cost of goods sold going to be?
When I rounded up, it was $712.50.
Good. And if I were to solve for my ending inventory as well, right, what should be my number here?
I subtracted, so I have 237.50.
Good, right? So 712.50 and this one is 237.50. So let's answer the question. Okay, number 33 says, what is the total value of your ending inventory on hand, which is the 150 units. Okay, we solved it right here. 237.50. Okay. Right? Remember what I was telling you, right? I could also include the answers that could have been from the previous different methods, right? Because right here, 262.50 was from the previous one, right? All right, and then here, question 34 says, what is the total cost of your cost of goods sold, which we solved to be that 712.50. Last example here, but this time we're going to be answering questions 35 through 41. Okay. Same exact scenario here where we purchased 100 on the 1st, then purchased 200 on the 10, then purchased 300 on the 15. So this one is the same except one thing is different, right? This time your tracking and your costing method is periodic, but this time it is LIFO. Okay? LIFO. So if I know that I am going to sell a total of 450 units, which batch of inventory am I going to sell from first?
The last batch on the 15th.
The last batch on the 15th. So I'm going to get rid of my 300 units here at $1.75, which is going to give me a grand total of $525. Okay? I still need to sell 150 more units. So which batch of inventory I'm going to take that out from?
The one on the 10th.
The one on the 10th, which is 200, so 150 times $1.50 is going to give me,
I got $225.
$225. So you got your grand total of 450 units at a grand total cost of $750. Okay, so that means what does my ending balance give me? What's my total here?
Is $200.
Yeah, right? If you take 950 minus 750, you should have 200 left. So, question number 35 here. What is the total cost of your ending inventory on hand? So, in this case, $200, right? And then question number 36 here. What is the total value of your cost of goods sold? $750. Okay. So then question number 37 asks you to do the conversion entry. So how would I complete my conversion entry here? What do I need to have?
We have ending the inventory toys.
Okay, good.
Yeah, with $200.
Okay.
And then we have cost of goods sold of $750.
Okay. Okay. What else?
And then we have purchase expense of $800 for credit. And then we have right expense of $150.
Okay. Good. Now, in this case, right, I had you guys write this out. For the multiple choice question, I could ask you this. Letter A says you can credit your toys for $200. Okay? Or B, you can credit your purchase expense for $800. C, you could credit or debit your cost of goods sold for $750. And then D could be A and B, or E could be B and C. So in this case, your correct answer will be your credit purchase expense and your debit cost of goods sold. And the numbers are correct. So in this case, that will be an example of how you could be asked a multiple choice question on journalizing. So it's very important that you understand when we say debit, that means you're going to literally debit the account, okay? And I will list the account on there with the respective amount, okay? All right, so that's good example right there of how I could ask you to answer that question. Okay. Number 38, 1 point. If on June 15, if the terms were 5% 15 net 30, and you decided to pay the vendor, okay, on June 30th, how much is the purchase discount? Okay. So in this case, I'm not testing you on the discounts, returns, and allowances for both purchases and sales on the actual inventory worksheet itself, but I am going to test you on any of the questions, right? Okay. So in this case, if on June 15, right? So in this case, we purchased June 15, we purchased 300 toys at $1.50 each with a freight of 75. Okay. If you made a purchase on that for June 15, okay, and terms were 5% 15 net 30, then you paid on June 30th, then what is the total amount of purchase discount?
The discount only apply on the last purchase on the 15th, right? Because the other two have met the conditions of the 15 days.
In this case, I am specifically asking for just one transaction.
Okay.
Yeah, so as you can see, if on June 15th. So I'm specifically focusing on just June 15th's purchase.
Okay. So the total was $450, and 5% of that is
Okay, so
$22.50.
what did you say? It was $22.50?
It's $450 for the total. You have 425.
That typo. So 450 times 5%. And you said how much you got? You got $22.50?
Yes.
Good, right? In this case, right, we recognize that there is no whatchamacallit, there is no opportunity for us to take the discount on the shipping, right? We only strictly can just take it off the original purchase price. So in this case, the original purchase price was the $450. We can only take 5% off of that. So that gave us a grand total of $22.50. Okay. Number 39. Okay. If on June 15 you found that 30 broken you found 30 broken toys, and of course, you return these items for a full refund. What is your total? What is the correct entry? Here, let me push this down so you can see answer D as well. Okay. So 39 again. Okay, if on June 15 you found 30 broken toys and you return the items for a full refund, what is the correct entry?
We got the returns on the purchase.
Good.
So $1.50 times 30 is $45. So it's B as boy.
Okay, so in this case, June 15, right, was that purchase of the 300 units at $1.50. We can only return the original purchase price again. We cannot include the sales, we cannot return the shipping. Okay, so this case right here, it cost me $1.50 per item. We're gonna return 30. So 30 times $1.50, you said was $45. So in this case, right, because this is a purchase, right? These items we're returning it to the vendor. So therefore, it is a purchase returns and allowances for $45. Okay. Then chapter 6 here, question 40 on June 24th. A customer returns 20 toys for defects because they were broken. So in this case, you give them a full refund. Okay, so what is the correct entry? So in this case, let's refresh what happened here. So on June 20th, right, we sold a total of 250 toys at $5 each. Sales tax was not charged. So in this case, right, I sold each toy for $5 each. So if this customer, okay, on June 24th, if this customer decides to return 20 of those toys, how much is the refund going to be?
It's $100 returns on the sale.
Okay, so good, right? Because this is a customer. The customer purchased from me. So that means I have to refund for what I sold them for, and if there is sales tax, you have to refund the sales tax. But in this case, I was specific. Sales tax was not charged. So in this case, I can only refund them for $100, and it's a sales returns and allowance for $100. Okay, so letter D, sales returns and allowance for $100. Okay. And then last question here, 41, okay? If there was a store-wide sale, okay, where all toys are 40% off on June 20th, okay, then what is the discounted amount? So in this case, right, let's refresh our minds again. If on June 20th, right, we sold a total of 250 toys at $5 each, and there's a 40% discount, how much is the grand total discounted amount? Okay. So we sold 250 toys at $5 each.
The total is $1,250.
Okay, that's for the total sale. But if I'm going to be discounting everything 40%, then how much is my total discounted amount?
So it's a sale discount for $500.
Yes. Right? Sales discounts for a total of $500. Right? Because this is me selling the product, not purchasing the product. Right? Good. Last question of the day is going to be a lower cost of market. So once again, I will give you these numbers here where the original cost was $3.75. The replacement cost is $3.66. The selling price is $8 even. The cost of disposal is 77 cents, and the total amount of profit is $3.45. So, how do we determine the ceiling price?
We subtract the cost of disposal from selling price.
So, selling minus disposal. So, what do I get here?
$8 minus 77 cents.
Which gives me
$7.23.
$7.23. Okay? How do I solve for the floor?
You take the ceiling price minus profit.
Which is $7.23 minus.
$3.45.
Okay, gives me a grand total of.
I have $3.78.
Okay, so now we need to compare the original, not original, sorry. We got to compare the replacement cost with the ceiling and the floor. So in this case, let's see. I have my floor price, my ceiling to be $7.23. I have my floor price being $3.78, and my replacement is $3.66. So, which one's in the middle?
The floor price.
The floor price of $3.78, right? Because your replacement of $3.66 is lower. Okay, so that means you're going to end up choosing the floor. Okay, And last but not least, let's answer the question, which one's lower? The original cost of $3.75 or the market price at $3.78?
Market price.
Original cost of $3.75 or the market at $3.78?
Original cost.
Original cost, yes. So that's why it's very tricky that you have to pay very close attention, right? Because 75 cents and 78 cents, right? It might trick your mind and say, oh, 78 is lower. Okay? But in reality, it's 375. So I guess. Okay. Good job. All right. Any questions in regards to the study guide? So this is